Welcome back to the Daily Crypto Roundup. Before we get into today's stories, it's important to properly frame where the market is right now, because today's session genuinely marks a shift in tone compared to what we've seen over the last few days. After a period of sharp volatility, repeated pullbacks, and failed rallies, the crypto market has recovered more convincingly today than at any point earlier this week. That doesn't erase the damage that's been done. Confidence took a hit, positions were shaken out, and sentiment was tested. But it does tell us something important about the underlying structure of this market. Over the past couple of days, rallies were short-lived. Each push higher was met with aggressive selling, and the market struggled to build any kind of momentum. What's changed today is not euphoria or hype, but consistency. Buyers have stepped in earlier, downside follow-through has weakened, and key levels are being defended rather than immediately given up. This isn't a breakout environment yet, but it is a market showing resilience, and that distinction matters. So in today's episode, we're going to break down why the market has bounced, what's genuinely improved versus what risks still remain, and then move through the most important crypto news stories from today, focusing on actual developments rather than pure opinion. We'll start by looking at why the market recovered today after several volatile sessions, including the macro and liquidity factors behind the move. We'll then look at why overall crypto market capitalization has been under pressure, even as Bitcoin holds up relatively well. We'll cover regulatory and industry developments out of the US, discuss Coinbase expanding beyond crypto, and finish with banking and stablecoin developments that are quietly becoming some of the most important stories in the space right now. Before we get into the prices and the stories, let's quickly do the XRP giveaway. The winner receiving 10 XRP is Chris Blake. The winner receiving 5 XRP is RR84. Congratulations to both of you. Please reply to the comment we pin below with your XRP address, and we'll get that sent over to you. If you didn't win this time, don't worry. Comments have been lighter this week, which actually improves your chances if you get involved now. Now let's take a look at where the market is. Bitcoin is currently trading around $88,000 after recovering strongly from recent lows and holding above key short-term support. Ethereum is sitting just under $3,000, stabilizing after struggling to reclaim that level earlier in the week. BNB is trading around $860. XRP is holding near $1.90. Solana is trading around $127. Tron is sitting around 27 to 28 cents. Dogecoin is trading near 13 cents. Cardano is hovering around 38 cents. Bitcoin Cash is trading around $620. And Polkadot is sitting just under $2. So broadly speaking, this is a market that has recovered ground, but is still working through overhead resistance and fragile confidence. The recovery we've seen today wasn't driven by hype or a single headline. It was largely driven by macro clarity and a reduction in uncertainty, particularly out of Asia. The Bank of Japan moved to raise interest rates, ending another chapter of ultra-loose monetary policy. While higher rates are usually seen as negative for risk assets, in this case the move removed a long-standing unknown that global markets had been bracing for. Investors don't just react to policy, they react to uncertainty, and once a decision is made, risk can reprice more cleanly. Asian markets responded positively, and that improvement in risk appetite fed into global markets, including crypto. At the same time, US inflation data hasn't deteriorated enough to completely derail expectations of future easing, even if those expectations have been pushed further out. The result was a market that finally had room to breathe. Bitcoin reclaimed lost ground, Ethereum stabilized, and broader selling pressure eased. Despite the bounce, the market has not transitioned into a full breakout phase, and that's important to acknowledge. One of the key reasons is positioning. Leverage remains elevated in parts of the market, and traders are still quick to take profits into strength. There's also a lack of aggressive spot buying at higher levels, which means rallies struggle to sustain momentum once initial short covering fades. This is why today feels constructive but restrained. Buyers are present, but conviction remains measured. That's not necessarily bearish. It's typical behavior after a period of volatility. One of the most telling data points today is that the total crypto market capitalization has fallen to its lowest level in 8 months. This doesn't mean prices are collapsing across the board. But it does highlight a shift in behavior. Capital has been rotating out of speculative areas and consolidating into a smaller number of large assets, particularly Bitcoin. This helps explain why many altcoins still feel weak, even on recovery days. Liquidity has become selective, and narratives that aren't backed by fundamentals or usage are being ignored. Historically, this kind of environment tends to favor patience and quality over broad speculation. A Reuters report today highlighted growing concern within the US crypto industry that regulatory momentum seen in 2025 may not fully carry into 2026. While this year brought clearer frameworks and improved engagement with policymakers, there's increasing awareness that political priorities can shift. That doesn't mean regulation is turning hostile again, but it does mean expectations are being recalibrated. Markets often react more to changes in expectations than to reality itself, and this cooling of optimism adds another layer of caution to the current environment. Coinbase also announced today that it is expanding further into stock trading and prediction markets, marking another step in its transition from a pure crypto exchange to a broader financial platform. This move shows that major crypto companies are thinking long-term and diversifying revenue streams. It also reflects changing user demand. People increasingly want access to multiple asset classes under one roof. While this news doesn't directly move token prices, it strengthens infrastructure and signals confidence in long-term participation. Recent inflation data triggered an initial rally across Bitcoin, XRP, and other major tokens, but analysts were quick to point out that the reaction lacked follow-through. This reflects a market that is reactive rather than decisive. Each data point matters, but none are strong enough on their own to reset the trend. Until clearer signals emerge, either from policy or liquidity, price action is likely to remain choppy. On the infrastructure side, Erebor Bank, a crypto-focused financial institution backed by Palmer Luckey, received conditional FDIC approval, bringing it closer to launch. This is a meaningful development for crypto infrastructure. Regulated banking access remains one of the biggest hurdles for broader adoption, and progress in this area often goes unnoticed compared to price action. While it won't move markets overnight, it strengthens the foundation the industry needs for long-term growth. Barron's also reported today that several analysts have softened their longer-term Bitcoin forecasts, adjusting expectations to account for tighter liquidity and slower adoption curves. Importantly, this doesn't mean these analysts are bearish. It means they're recognizing that the path forward may be more gradual than previously assumed. Markets often respond better to realistic expectations than overly optimistic narratives. Finally, SoFi launched its own fully reserved US dollar stablecoin, SoFi USD, as part of its broader crypto offering. This is another sign that stablecoins are becoming core financial infrastructure rather than niche crypto products. Traditional financial firms are no longer experimenting, they're committing. Stablecoins also play a critical role during periods of uncertainty, allowing capital to remain in the ecosystem without taking directional risk. When you put all of today's developments together, a clear picture emerges. This is not a market driven by hype. It's a market driven by structure, policy, and restraint. The recovery we've seen today shows that demand is still there, even after a difficult period. At the same time, caution remains justified. The market isn't broken. It's recalibrating. And that's often the hardest environment to navigate, because it rewards patience rather than aggression. Today's recovery doesn't erase recent volatility, but it does show that the market still has depth and support. Buyers are present. Infrastructure continues to improve. And while sentiment isn't euphoric, it's no longer collapsing. As always, drop your thoughts in the comments, get involved in the XRP giveaway, hit like, follow the show, and we will see you at the top.